Well, these companies are secular growers of profitability. They generate phenomenal amount of cash flows. They are, of course, beneficiaries of the new economic, the new social order that we're going to live in post-COVID. So at this point in time, we still like them. Having said that, if you do get a full-fledged return to work strategy implemented over the course of the next 6 months, then deep cyclicals do come into the picture. And when you talk about deep cyclicals, financials and industrials are two sectors which could come back.
Binay, it's Hadley in Abu Dhabi. Obviously, the U.S. presidential debate, the first one, is taking place in the next several hours into tomorrow. I couldn't be more excited to watch this, see how it all plays out. But in terms of the markets, we've had so many conversations in the last several months about whether or not the market has braced for this kind of election, maybe one that we've never seen before, a potential contested election. What's your take on that?
Yes, indeed, more than the election outcome itself. And we've done studies looking back at the history of election cycles in the US, and we did not find discernible difference in returns depending upon whether a blue wave takes place or a red wave takes place, or even a split administration comes true. Having said that, the real concern
reality is it's not going to be like Bush versus Gore, right? Because I covered that election. So Bush versus Gore, I think, was a very different kind of contested election, right? This was a Florida recount. This could potentially be something much, much bigger.
Yeah, in fact, that's the other reason why the markets have not been doing well lately, because the base case in the market now is for a contested election where the election results take maybe a week, 2 weeks, or even longer to come out. And that uncertainty is not going to be good for markets. If you look at the VIX futures slope up quite significantly between November and December, and then the slide down. So the market is already bracing for some volatility around that. But yes, if the results drag on for longer than a couple of weeks, I don't think it's priced into the markets yet.
Given all of that, plus what we're seeing over in Europe with this Brexit negotiation, what looks good to you right now?
Equities, but we maintain a secular bias towards them because on a longer term basis, they still offer higher returns as compared to fixed income asset classes. Having said that, in the near term, we're maintaining a lower level of risk because we think you could be hitting a bit of a fiscal cliff driven partly by political maneuvering. We've got some lack of clarity from the US Fed on its asset purchase program and yield curve control, but we think the Fed is going to remain very supportive. And you've got, as you said, the Brexit uncertainty to go with the US election uncertainty. So combined everything put together, we are a little defensive, but we still like the secular growth stories. In the US, we like tech, and in Asia, we like the offshore listed MSCI China, we like Korea, and we like credit as well in terms of investment grade credit.